Before you buy another stock, make sure you understand these simple 8 things that will help you not only avoid lousy stocks, those that are likely to go down after you buy them, but also help you focus in on the stocks with the very best potential. Hi, I'm Tyler Ballhorn. This is the Stockscores Market Minutes, and in this week's video, I'm going to show you a simple approach to evaluate any stock in seconds. Whether you're a day trader, a swing trader, a position trader, or even a long-term investor, understanding these 8 things is going to help you do better in the market. I'll also do my normal market analysis, and then at the end of the video, we'll look at the trade of the week, a stock that made big gains on Friday. All right, so let's get into the list of the 8 things. And I will show you these things on a chart, but let's just go through the list first. Optimism and pessimism, support and resistance, low price volatility, abnormal activity, reward for risk, and whether the stock is overbought or not. Now, these things make a lot more sense when we look at a chart. We're going to begin by identifying all the peaks and valleys on the chart. So I call these inflection points. So anywhere you have the price stop going up and start going down, you've got a peak. Anywhere it stops going down and starts going up, you've got a valley. All right, so we're not going to highlight every single one, but we got most of them. Now, the next thing we're going to talk about is support and resistance and optimism and pessimism. If I draw a line across the bottoms and it's rising from left to right, then we have optimism. If I draw a line across the tops and it's falling from left to right, we have pessimism. Resistance occurs anywhere there is a ceiling price that has been hit multiple times at those inflection points. So we can see resistance there. We can see a little bit of resistance here. Support is a floor price that has been hit multiple times. The more times it's hit, the more important it is. Now, the next thing we're going to talk about is price volatility. If price is moving down in a trend, it has volatility. If price is moving up in a trend, it has volatility. What we are most interested in is when price is going sideways. So when we have sideways trading action, there is low price volatility. What essentially means is that the buyers and sellers agree about what the stock is worth, and that's why the stock is going sideways. Now, when we get abnormal price gains from low volatility, from optimism, we have our very best opportunities. So this was a very good opportunity right here. When price goes sideways, from optimism, breaks through resistance, from low volatility, we have what we want. So there's 2 scenarios on this chart where we've got a good situation. We never want to buy a stock when there's pessimism. So when trend is down, don't buy, because you're buying into a situation where there are people that own the stock at higher prices from the recent past, and they are going to be inclined to sell into strength. So wait until the trend switches from falling tops to rising bottoms. Now, what about this concept of overbought? Anytime price runs away from the trend line, like it does here, where the distance down to the trend line is quite far, the stock is overbought. It's at this time that the stock will feel the best, because the stock has been going up for a number of candles in a row. It feels like everything is great because price is going up day after day, week after week, or even minute after a minute if we're looking at a day trading chart. But it's the most dangerous time to buy, because when price is overbought, it's likely to pull back to the trend line. And we see that a number of times on this chart. We get overbought, we come back to the trend line. So the ideal formula is to buy a stock when it's breaking from low volatility, from optimism, with abnormal activity. But the last thing we need to think about is reward for risk. If I'm buying here, and I'm going to have my stop loss point there, which is at the last inflection point low, I need this stock to have at least 2 to 1 reward for risk potential. We call that 2RR. This stock will get stuck at highs from the past. And so if this stock had a high point here in the past, we would be a little cautious because it's just barely got 2 to 1. In this case, however, we don't see any resistance of major substance. There's a little bit right here, and we expect that that's going to slow the stock down a bit, but that's really what we want. The ideal pattern occurs when the stock is in a downward trend. It breaks the downward trend, builds a rising bottom, and breaks up from a rising bottom. Here is optimism, low volatility, resistance, abnormal activity, optimism after pessimism. That's exactly what's happening right there. That was the best time to buy. Now, if someone on TV or in the news said you should buy Google right up here, you're going to say no because you can see that it's overbought. It's extended to the upside. If someone told you to buy over here, you're going to say no because you can see that the stock is in the grip of pessimism. You have to wait until pessimism changes to optimism, where you can get that breakthrough resistance from low volatility, and then it continues higher. If the stock is in an upward trend and it pulls back to the trend line, these are also good times to buy. So if you like a company, let's say you think Google's a great company, Alphabet, and you see it breaking up off of an upward trend line after running away, pulling back, breaking up off of it, sure, that's good. But don't chase it when it's run away from the trend line. Now let's look at this same thinking on a shorter term trade. This is a stock QUBT that's had a good run the last few weeks. And you can see that over here on the left, we had pessimism. We still have pessimism. But then eventually, sorry, let me redraw that line there. Here is pessimism. My line drawing tool tends to snap to a horizontal line. And then we start to build optimism. See how those bottoms are rising? And then we're breaking out through resistance from optimism, from low volatility with abnormal activity. See the volume spike? Abnormal price action. That was at $7.75. 2 weeks later, it's at $14. Up here, overbought. Pull back to the trend line right here, that's okay, but don't chase it when it's overbought. Wait for it to pull back, buy the break of the pullback off of the trend line. You can see here it works well for a much shorter term chart as well. All right, so now we're going to get into this week's market analysis, and we'll go through the major stock market indexes, some of the commodities. I want to start with the chart of the S&P 500, but before I do, a reminder that my website, Stockscores.com, has a free weekly email newsletter. I send it out every Monday. And if you want to subscribe to that, it's free. Just click on this See More button here, and I will put you on the list for that. We don't send out a bunch of spam or anything. It's just a nice weekly reminder of how to trade effectively, and as well as my analysis of the markets. All right, well, we're going to dive right into the market analysis with a look at the S&P 500. And we're going to go on a 3-year chart. And there you see the market has been in this upward trend for almost 3 years. It ran away from the trend, it pulled back, and it bounced. So that's normal. That's what we would expect. This steeper upward trend was broken, and that's what led it to go down to that longer term upward trend. Well, we're now coming up to resistance right here. We could build a falling top here and start to roll over and move down, which would mean that the sellers would take control. So in the short term, we saw a little bit of weakness at the end of this past week. If I go to the 1-month chart, you can see here that the cycle of rising bottoms was in place, but now it's starting to build some falling tops. It's still in an upward trend, so we're still relatively okay, but I do think a little bit of caution is warranted because of the weakness of the last 3 trading days this past week. So overall, the market's not bad. It's hanging in there despite all the negative headlines, but there's some areas of concern, and I think we want to be a little bit cautious. Let's take a look at the NASDAQ 100, QQQ. Now the difference here, if we go to the 3-year weekly chart, is that this market chart has actually broken its long-term upward trend. And that means that this is strong resistance. So we're running up into this. That means upside is relatively limited because I expect it will get stuck there and roll over a little bit. So it doesn't look particularly weak, but it doesn't have a lot of upside either. You can see again a little bit of weakness here the last 3 trading days. Not really breaking the bullish cycle in the short term, but it does look a little bit toppy. Let's move along to the Russell 2000 IWM. And there you can see this upward trend line has been broken right as it came into this long-term downward trend line. So the small cap stocks are doing much weaker than the large caps. However, the best trading opportunities, and I'll show you one from this past Friday at the end of the video, the best opportunities come from the small caps. So although I'm not eager to buy the small cap market in general, individual stocks within the small cap market are the place to be, provided they have signs of alpha, which are abnormal activity, abnormal volume, abnormal price action. Canadian market, great rally off of the lows, coming into resistance at the highs. No great surprise that it gets stuck there. Probably going to remain stuck for a while. Looking at gold, gold is one of the reasons the Canadian market has done well. And you can see there this parabolic rise, breaking that. I think now we're just sorting out lots of volatility in gold, lots of uncertainty. I think it probably needs to pull back a little bit more, touch that trend line. I think if you're in gold, still a hold, but I wouldn't be a buyer up here. I think it's very risky. Let's take a look at oil. USO is the chart that I like to use for oil. So who's in control? Sellers. See the tops are falling? So we have sellers in control. We are on the longer term chart, the 3-year weekly, really just stuck in this trading range. It's been in place for 2 years and we're at the bottom of the range. So although the sellers are in control here, we're also at a floor price where price should bounce and start to move up again. I just don't see the sign of that happening yet. We need to break this downward trend line. So it's a bearish market, but it probably has more upside than downside. Currencies, UUP is the symbol for the US dollar. Who's in control? Pessimism. Sellers are in control. Until this downward trend line is broken, remain relatively bearish on the US dollar. Looking at the weekly chart, you can see it's at that support where it should bounce. GBTC, Bitcoin, having a great run the past couple of weeks, broke the downward trend line, now building rising bottoms, but at this resistance where it should get stuck. If we look at the 3-year chart, we see that long-term cycle of rising bottoms is in place. I think if you're in Bitcoin, it's a hold, but buying up here is a little risky because we're getting a little overbought. We're running away from the trend line, just like we had up here. It probably can go up a little more, and then I think it's going to start to come back to the trend line. Let's take a look at the bond market, TLT. Pretty ugly chart. So the sellers are in control of bonds, which means interest rates in the US remain elevated. Very weak bond auction this past week, which was detrimental to the stock market. The world is not interested in buying US bonds these days. We had a debt downgrade by Moody's last week, and now we're seeing continued weakness in the US bond market, which means interest rates staying elevated, which is really hard on the small cap market, which is why the small cap stocks are underperforming the large caps. So my ratings then. Short-term bullish on the US large cap and NASDAQ, but long-term neutral. Small caps, short-term neutral, long-term bearish. Canadian stocks neutral on both time frames because we are coming into that resistance zone. Gold, short-term neutral, long-term bullish. Oil and the US dollar neutral on both time frames. I would say the US dollar quite bearish in the short term, but it is at a place where it should bounce back. Bitcoin bullish on both time frames, and bonds short-term bearish and long-term neutral. All right, so now it's time for the trade of the week. This is an example of a stock that we traded in the active live service on Stockscores, which we run every day, looking at the opportunities for day traders and swing traders. So this is a stock that I found Early on running our algorithms, we had the initial move up here. We had a pullback break right there. That was entry point number 1. We then had what's called a intraday pullback strategy play. So if I just draw a little trend line across there, you can see my pink and yellow dot, that's my action candle indicator, firing as it breaks resistance from low volatility, from optimism, and that led to this nice move to the upside. Simple concepts that I talked about at the top of the video. We applied them to long-term charts. You can see here on day trades, you can apply it just as well. You understand those things, you can evaluate any stock in seconds. It's not hard, it just takes a little bit of practice. If you want to learn more about how I do all these things, go to stockscores.com to the trader training area and you can learn more about what we do. Hope you've enjoyed this week's Market Minutes video. If so, click on the like button, make sure you're subscribed to the channel, and as always, trade well.